Hello and welcome. As previously we understood about the balance sheet, we understood the assets, we understood liabilities and equities. We understood that there are the two types of liabilities. First of all was the current liabilities and then we got a non-current liabilities. If we see toward the asset, it has the same classification as the current assets and the long-term or you can say non-current assets. And if we go to the third part of an equation, by the way, I'm telling you that balance sheet can also be called as an equation that your assets must be equal to equity plus liabilities. Your accounting equation. It's my theory, it's my point of view. By the way, financial modelers or analysts, you should have your different point of views. If we see it with the practical balance sheet available in front of you, and it is Henderson Manufacturing, so we have an actual results of 2019 to the 2021, and then we project it from the year 2022 to the 2023 6. We have assets, we have liabilities and equities. If we see toward the assets, at the first you have been provided the cash, account receivables, inventory, prepaid expenses, and others. So these are the list of current assets which a company owns. Next, we got some long-term or you can say tangible or non-current assets. So we have only the property, plant, equipment, the large amounts in our front of you. Then we have some other assets in form of equities and liabilities. First of all, we have been discussing some current liabilities. It's your way of presentation. I have yet presented my current liabilities at the top. We have a bank overdraft or whatever you can say it. We have account payables, some other short-term liabilities. We see toward the long-term liabilities or non-current liabilities. We have deferred income taxes. We have some long-term debt. So you can say that there some portion of long-term debt as well as the short-term debts. Add below we have common shares, we have retained earnings, we have equity portion as well, and then we got the total of equity and liabilities. You know that in your financial reporting process, you prepare some of your sporting schedules, working notes, ledgers, as it's a complete part of your bookkeeping and financial reporting. Here in financial modeling, you only prepare some of those, or you can say you can prepare all of your ledgers and schedules. By the way, your ledgers and schedules are being named as a single thing or same thing. So here at the first, you got to see the depreciation schedule. Next, your income tax schedule. By the way, this financial modeling workshop is just a overview, or you can say it's just an introduction to your financial modeling course. We covered a detailed analysis on an income statement. Now we are covering detailed analysis on a balance sheet. Next, we would be covering detailed analysis on a cash flow statement as well. We understood what is a dynamic financial model. We understood there should be relationship between the three statements. What are the statements? We have a cash flow statement, income statement, and the balance sheet. Currently, we are understanding or we are advancing our balance sheet. And in the forward, you have a video on your forecasted income statement. That forecasted income statement is also being linked towards your retained earnings to explain your balance sheet relation as well. I'll come back. We have depreciation schedule. In your detailed course, you would be learning depreciation schedule as well. You have your income taxes schedule, your current tax, your deferred tax, whatever you need to see. So your current tax is a tax which you want to pay in a current year, in a current period, while your deferred tax is also a tax which you pay currently, or you look towards the future thing. Sometimes it being reversed, or sometimes you need to pay in the future. You have your working capital schedule. So this working capital schedule is very important for your cash flows as well as your balance sheet. Here at the front, I'm explaining your working capital schedule now. When we gonna look toward the cash flow statement deeply, I will be just overviewing your working capital schedule. This is a proper format of your working capital schedule available in front of you. You have your 2019 to the 2026 data. 2019 as an actual, it should be the base and it should be considered an empty. I have 2020 result, 2021 result, and similarly moving forward. First of all, I look towards my income statement items. We have a net revenues and then cost of sales. These are being expressed in a million terms. Whatever you can see, or you can multiply with the zeros or 1 million to get a proper result. But I hope working in a millions would save your time and understanding your data. Denominations is very important. Unit metrics is very important. Then we got to see account receivables, inventories, prepaid expenses, so our assets and liabilities details. Which assets, current assets, which liabilities, current liabilities. Add below, you can see we have two current liabilities, account payables and other liabilities. Let me highlight those. Next, we got to see, you can say that our further workings in account balances. At first, we represent the days. How many days do we see? How many days our receivables are paying our cash? 43 days for the year 2020. At the top on the formula bar, you can see the formula working. This will be comprehensively explained and be working practically in the long course. Similar way, we go towards the inventory, we go towards the prepaid expenses and the other assets. Here at the below, you have your liabilities, then account balances. So these are the millions being amounted stated. At the top, you have your stated in a days. You find out your values and then you go to see your net working capital. If you click toward F2 key, it means that all of your account balances of an assets are being added together. You can use the sum function as well, and then you subtract your current liabilities to get a net working capital. As previously, there's no value for 2019, then changes in working capital for the 2020 and 2019 remains blank, and you work for the 2021. If you click toward F2 key, it made a subtraction of your net working capital. This working capital schedule is very important for your balance sheet forecasting and for your balance sheet analysis. Similarly, it will be linking to other cash flows. I am not touching the cash flows yet. We are understanding for the balance sheet. What's the next? I got my debt and interest schedule. So this is being a comprehensive schedule of a debt available in front of you. You have some financing cash flows for your components, and then you got to see annual interest incomes. You got to see the free cash flows. You got to see some further workings, and this debt and interest schedule is also being linked towards the long-term liabilities and your interest expense in your income statement. That interest expense is a non-cash item. Here you have your net interest expense available at the bottom, which would be linking upwards in your income statement. Here is your income statement and your interest expense for the year 2021. It's 12 millions. 2022, by the way, for the forecasting, and it's you can say 12 millions have been commonly united, and that has been linked in your back down workings. As you see in your formula bar, it refers to the working to the K315 cell. If we look toward the K315 cell, how it is being linked, and here at the below, you need to see that it has been linked here and below. This is how you got your working linking, the practical way of understanding. You prepared your depreciation schedule, yearly depreciation, although there is no PPE schedule that has been linked upwards in your balance sheet. As you can see that here you got your balance sheet working. If we see, the blue ones are the historical result and your black ones are the projected. If I click here, it says you got to see your opening working. Then you subtract some further things. What the things you are being subtracting? Let me show you. It says you are subtracting the cell K1 to 9. It is being referring to your depreciation as well, your current year depreciation and your previous year depreciation. You have different types of working. So first of all, it is being depreciating you at your scale. You can see 16.2, your depreciation and amortization. By the way, it has been collected from the cash flow statement. You can link from your depreciation schedule as well. You have been adding or you have been working furtherly your capex to get your result. You can prepare a separate schedule of a PPE as well. Here I have been prepared a combined schedule, but in your long case study, you're gonna prepare it separately for your workings. Similar way you're gonna do for all the projected years to get your net PPE to be shown in your balance sheet. So see, for the year 2022, your depreciation is 16.2 and that has been upward linked towards your cash flow statement as well as your income statement. A single thing has been reflecting towards all of your ways. This was the balance sheet advancement. After working on your working capital, you got to post those balances on your asset side to get your assets and liabilities equities working. Next, your PP schedule as well. Your debt schedules. All of your schedules will be preparing side by side to get your results, and hence you're gonna see it here. You got your equity result and this equity balance of a retained earning as well as your common shares will be shown towards your balance sheet. I hope you understand the balance sheet very well. Thank you for your viewing. Share the course link with others to get a benefit.